Okay, ladies and gentlemen, welcome to this BIAN webinar that we are proudly to present in close collaboration with our longtime member, Play Digital. We are focusing today on the evolution in banking, open banking, open finance, neo-banking, and so on and so forth, and also the challenges that it brings to the organizations that is moving in that direction. And as far as we are informed, let's say every financial institution is moving in one of those directions. So what we would like to do, we would like to give you some tools and some insights how to move in that direction. So the challenge that we see is that there are a lot of people, let's call it in the architecture space, in the developer space, who knows what to do, but it's very difficult to make the right connection with your C-levels. So we will also try to give you some answers and suggestions how to get C-levels more involved, so that the whole effort that is taken into account to create all the materials that are needed to move in the direction are more sustainable. So if we can go to the next slide, and I set it to our friend Gabriel. So one slide back, please. So as I already mentioned, it's me, the Hans Tesla, the Executive Director of BIAN, and Francesco, you see us both on the screen. And this is a joint effort. So this is my welcome. I will also explain a little bit for those who are not familiar with BIAN, the Banking Industry Architectural Network, or what we do. Then I hand over to Francesco, and then we will have 2 or 3 slides at the end, and then we end with a Q&A. And about the Q&A, so you can type in your questions in the Q&A box or in the chat box, and if we don't have sufficient time to answer all the questions before the end of the hour, we download them, we put them in a document, and together with a link for the recording, the slide deck that is used, and the Q&A will send to the email address you provide us with. So if we go to the next slide, we have the introduction to BIAN. So BIAN, the Banking Industry Architecture Network, is a not-for-profit association, and our mission statement is to solve the integration issues for the bank. And the integration issues today are not only inside the bank, so how do I connect the different bits and pieces of my IT system, but also outside the bank. How do we connect to our own app? How do we connect to PayPal, Alipay, peer-to-peer lending, and so on and so forth. So it's a wide range, it's a broad range, and we develop the different models that Francesco will dive into to help organizations to understand better what they are doing and how they can become more agile and at the end move to a plug-and-play environment. So we cannot do it alone, so we need our members. So the members, and you see here the financial institutions, the members helps us by participating in working groups. So they determine what we are going to do. They determine the course of the direction that we are taking. They initiate working groups. So it's a truly member-driven association. So here you see the financial institutions, and if you scan it, you could see it is from all around the globe. And here you see what we call the partners. The partners are the integrators, the consultancies, the solution providers, and so on and so forth. So it's a lot of familiar names and maybe less familiar names. It's small and large. We have Microsoft, IBM, but it's also from a global spread. So from most of the regions on the globe, you will find a member. And when we go to the next slide, we also have partners. So we have 5 academic partners that we occasionally do projects with. Then in the middle part, you see the standards bodies that are active in our industry. And we are extremely focused on ISO 20022. We try to align as much as possible to ISO 20022. And on the bottom, you see 3 names, including Play Digital Consulting, who are our accredited training partners. So they can provide additional training, classroom training, virtual training, tailor-made training, and so on, all based on the biomaterials. So that is the whole ecosystem that we have to offer for members and not members, because everything that we publish is royalty free. And I mentioned it's about integration. So when we look at this slide of the American banker, so what are the challenges if you want to change your organization or modernize your organization? And you see that 63% of the respondees said it's integration. It's integration, it says here, with external and systems and products, but I'm convinced, and you're probably also convinced, that it is also with internal systems and products, because no one starts from a greenfield operation. So I think this also shows that what we are doing as BIAN is still in the sweet spot of the whole evolution that we are going through in the banking industry. So I think I hand now over to Francesco. Can we see the next slide, Gabriel? That I'm sure. Gabriel, wake up.
Okay.
Yeah, there he is. Okay, Francisco, I hand over to you.
Thank you very much, Hans and BIAN, for this invitation. And thank you, all of you, in the different kind of the globe where you are. This is a global challenge that we need to face in a very straight line way. Okay. So the goal today is to explain the key questions, the key concepts that we need to handle as architects when we talk about the discussion with the C-levels. You know, of course, if you go to the market, everybody's talking about open banking, open finance, neo banking, open data. Honestly, too much concepts. I can tell you that 99% of the times, I think that the concepts are wrong. So we are not honestly understanding what is the concept of open banking, open finance, and neo banking. And honestly, I face many times discussions that as an architect, I plan to go, I recommend to change my core banking system, or I am starting an appification program, or I need to modernize my legacy systems in order to go to this new open banking, open finance space. And also I need to improve my security layer. I also need to see the way to integrate the fintech. So I see many concepts, many programs around the concept of open banking, open finance. But honestly, few times I have seen an integrated approach in the way to move on or to move forward in open finance. And honestly, it's because most of the times the concepts around open banking, open finance, and neo banking are not fully clear. And it's something that generates big issues when you try to interoperate or you need to integrate in this new ecosystem. And also, in terms of architecture and in terms of investment, creates some reinvestments because the efforts that you did at the first time were opposite to the open finance concept. So the goal today is to explain, first of all, the concepts that you need to have as an architect when you talk about this with the C-levels, and also how BIAN supports this new wave of banking. And I want to start with two concepts. Let me tell you, I weekly read, I don't know, 3 strategic plans per week. And for me, the first mistake that I see is that I don't see in any part 2 major concepts: standardization and decoupling. And really, the future of the financing sector is to be a decoupled architecture, to have a decoupled architecture. Instead of thinking of I am a financial institution that I will handle the customer, the product, the channel, the risk, the onboarding, the post-sale, everything, you need to start thinking, okay, I will handle the customer, but you can handle the product, you can handle the channel, you can handle the risk, like a Lego. This is the future of banking. This is the future of finance. The way that you can honestly handle your organization as domains. You have many domains, and also these domains can work independently. And also the standardization is the second important part, because these domains must be standardized. Why? Because it's the only way that a third party can integrate with you in an easy way. So these two concepts are the key pillars of any open finance strategy in any financial institution. It's not said by me. If you see organizations as JP Morgan or also Gartner in the Summit or Money 2020, you see that these two concepts are the key pillars of any open banking, open finance strategy, and also any neo-banking strategy. Next, Gabriel. And also we need to stop the concept. It's very important as an architect, stop the concept that I am a bank that I will handle everything. I will handle the customer, I will handle the product, I will handle the post-sale, I will handle the channel, I will handle the risk, I will handle the compliance, I will handle the rules, I will handle everything. No, this is not the way that the new banking wave move. The new banking wave move in the way that you can split these domains and you can share these domains with each other, with fintechs, with another bank, with a retail, with a marketplace, or with whatever. Because right now, the financial products will work together with the customer's journey. And the customer's journey will not be owned by the bank, will be owned by me. For example, if I am in Amazon, I want to buy something and I need to have a buy now, pay later. Honestly, I don't want to go to a bank. I will handle the buy now, pay later directly in Amazon. And I don't care if this buy now, pay later is given by Citi, Bank of America, Chase, or whatever. I want the buy now, pay later. That's it. So it's very important to understand this change, because normally when you face these strategic programs, they believe that the bank will continue being the face of the customer. And honestly, if you see the last analysis made by Money 2020, maybe in 3 years, 70% of the banking products will be managed by third parties, not by the banks. The banks will be a backend. So it's very important to stop this concept that I will handle everything, okay? Because it's typical concept of any traditional bank. Next. And also, in order to do that, Gartner, Open Group, and also BIAN have created some kind of evolution to understand where we are and where are we going to be, okay? And also, this is the typical evolution that you need to have from the digital bank, where you are a classic organization that you improve your digital channels, or you try that your products moves on in your own digital channels, that is digital banking. Open banking, that is that you can offer several services and data from your products in third parties, okay, in order to help the customer in third party areas, but it's not a complete delegation of the products. Normally a delegation of data or a delegation of an operation in your products. Open finance, that honestly is the real neo-banking, is where you can delegate your product 100% to a third party, and this third party can operate your product. The product is yours, but the third party can operate, can handle the channels, can do everything. It's your product, but honestly, you are not the front face. And this is something that we need to face, that because it's the future of the banking, that your product can be embedded in these channels that are not yours, okay? And neo-banking is where you can create a product by a third party together with a fintech or with a marketplace or with another bank, where you can share domains. Okay, you will handle the customer, I handle the product, you will handle the position, you will handle the payment, I will handle the risk. So you can create a complete product, but different players are giving different domains in order to create the product. So the product is not completely yours. Part of the product is yours, part of the product is from third parties. And the adaptive neobanking, it's where you use artificial intelligence and cognitive analysis, okay, machine learning analysis in order to improve this delegation, okay? So when you talk about digitalization of products in the organizations, nobody thinks that my product can be used totally by third parties. And I was with a customer that told me something that is true. If you want to create a digital product, you need to think like a fintech. If your product can be separate from your financial institution and can work separate from your technological data, honestly, you have an open finance and neobanking product. But if you cannot do it, honestly, you are totally gained with the bank and you cannot move on in these new environments. That will be the future, okay? This is very important because in order to face that, we need to think in our products. And honestly, what is a product? That is very important. A product is a combination of 6 things: the onboarding, the operations, the rules regarding to the product, the post-sales, and the channels and external channels. That's it. This is a product. A product is a combination of these 6 topics. And also, in order to understand if your product is prepared to work on in an open banking, open finance, neobanking, and adaptive neobanking space, you have few questions as an architect that you need to make. And these are the questions. Next. Digital bank, I think that almost all institutions is moving in this way, that all my product is mine. The onboarding is mine, the operation is mine, the post sales is mine, the rules are mine, the channels are mine, okay? So basically, I can operate my product using my own digital channels. And maybe I can create some gateway for third parties in order to give some information. But this is the typical step that 95% of the banks are today, digital bank. And the wrong thing about it is that they think that based on this, adding appification, they are done. We are in open finance. That's not correct. Remember what I told you at the beginning. If you want to be an open finance neobanking bank, if you want to be a 4th generation banking institution, you need to forget the concept of everything is mine. This is the key question, and this is domain-driven architecture. This is composable architectures, and this is what BIAN said, service domains. This is the key pillar of open finance. Try to avoid the concept of the whole picture and try to think as a Lego, that we have different components. But anyway, this is the first step. This is the first step that almost all the banks are. Next. In open banking, sorry, in open banking, I didn't see the change. In open banking is where, okay, my product is mine, but I want to give some kind of information to third parties. A third party can be a fintech, a third party can be a marketplace, a third party can be a retail institution in order to optimize my customer journey, my bank customer journey in their sites. Okay, sounds great. It's useful for your customer, but again, the product is totally controlled by the bank. All the domains are mine. Right now, in the last analysis created by Money 2020, we are talking about 10% of the products will move in this area. 10% of the future products that will appear in the market. Okay, sounds great. And if I create my application. Maybe I can offer this. Wonderful. Step 2, remember that you have 5 steps. This is a step 2. Step 3, very important, because as I told you, in my experience, I am talking with 6 to 10 banks weekly. No one is making the question, okay, all the domains must be mine or not? I need to handle everything or not? And the answer is no. And normally, this question haven't answered by the architects, haven't answered by the C-levels, okay? And the open finance is where you can delegate, completely delegate your product to a third party, and also your product can work with the third party without your systems. You don't need your core banking system. Maybe you can use a third-party core banking system. So open finance is still your product, but you can give everything to a third party. The onboarding, the post-sale, the operations, and in their channels, in their journeys, they can embed your product, and your product can fit the customer journey expectations, okay? And this is very important because it's a break point in banking strategy. This is a new wave of banking where I can put my product in a third-party journey and my product is still there. And if you see solutions like PayPal, like Stripe, like Slim, like you have many fintechs or neobankings, all of them have something in common. They can work in an embedded way in third party's journey. And this is very important question that you need to answer as an architect and that you need to explain to the C-levels, because normally the C-levels are not aware in the proper way what it means this, okay? The next way, that is neobanking, is wonderful because it's where the future fintechs and the banks will work together. You know, right now we have the fintech fever. Everybody thinks that can create a fintech, and sounds great, sounds good. Right now in Americas, I don't know if you see the last report, 85% of the fintechs are moving down. Why? Because honestly, all the fintechs are created based on the fact that they will handle the complete journey. Honestly, it doesn't work. So it's very important to understand that if you want to work in this neobanking space, you need to share. You need to be part of a complete product where third parties can fit another domains, and you can fit another domains for the product. For example, if you create a product with Amazon or with eBay or with Costco or with whatever retail or with Lego itself, okay? I can tell Amazon, please handle the customer, okay? Because we face, and this standardization is very important, we face the same customer concept, okay? So you handle the customer. After that, when I make the product onboarding, I will do it. The risk, we can do it together because you know your customer and I know my customer and I know my regulations. And the payment can be done by you or by me, okay? So this is the way that you can share domains. And in order to do that, a part of the coupling, you need to handle a second important concept where BIAN is very important, standardization. Because if party or customer for Amazon is different that customer from you, it's impossible that you can talk with each other. If credit scoring for you is different than credit scoring for a bank, honestly, you cannot share information. And you need to create, each time that you try to create a journey, you need to create a technological project to solve the situation. And it's impossible. It's impossible to handle that. So in neobanking, it's very important to handle a standardization. And standardization today is BIAN. Very important point. And the next and the last concept is the adaptive neobanking. Everybody's talking about and is investing a lot of money in artificial intelligence. You know, is the new toy in technology. And yeah, I am a believer. I also have been part of a digital product created with artificial intelligence with an American bank that right now is one of the leaders in the US space. And also I know what it means. But again, you are trying to do that based on your semantics, based on your data, based on your concepts. And adaptive neobanking is the way that you can add to these semantics, to this standardization, machine learning or artificial intelligence concepts. Okay, if you don't handle the semantics, it's impossible again to work in a environment where we talk with each other. Okay, so again, we see many artificial data governance, artificial intelligence projects, machine learning projects that also is failing. But it's failing because something very important. No one is applying standardization. And the key point for the artificial intelligence is the language. If you don't handle a general language for everyone, it's impossible to talk with each other. Okay, so these are the 5 different pillars: digital banking, open finance, neobanking, adaptive neobanking. And it's very important as an architect, explain that in the good way to the C-levels, mainly with the business C-levels, because normally they don't understand these concepts in the proper way. Okay, and these are your sponsors, and it's very important to handle that. Next. Also, when you create these 5 pillars in terms of evolution of the financial institutions, also your products evolves also. So when you see that you are a digital bank, basically what are you created is branchless digital financial products that can work in your digital, fully percent in your digital channels. Okay, this is the step where 99% of the products are working today in the financial institution. We have also products that can work in third-party channels. It's more open banking. I can tell you that, I don't know, 1%, 0.7% of the products are starting in this area. But the white brand and joint brand that will be the majority of the business in the future is where my product can work as a white brand. I can give the product to a third party, and their third party can integrate in their journeys. And also I can co-create this product with Amazon, with PayPal, with Slim, with whatever, because we believe that all together we can create a better product. So these 2 concepts that are related to open finance and neobanking will be the future in the next 3 years. And I will tell you, because we see a research also with FinTech Americas and Money 2020, where the financial institutions analyze that these 2 layers will handle 75% of the future financial products. And also, no more than 1% of the financial institutions are dedicating investments to move on in these areas. That's the big problem. This is the future where we are not investing properly to be in those layers. And of course, the self-adaptive digital financial products are products that works with machine learning. But of course, if you can handle the layer 3 of the products and the layer 4 of the products, it's impossible that you will handle the level 5. So it's very important for you as an architect that you can face the layer 3 and the layer 4 as the key driver for your architecture and a key driver for your IT investments. Next. And also, when we talk about the coupling, because you know, something that for me it's surprising. Let me tell you a word that is not offensive. Surprising is that everybody right now is talking about the coupling. Yeah, we are decoupling. Yeah, we are standardizing. You know that decoupling is a concept managed by Open Group and have standards that you need to face. It's not I decouple because I decouple. It's, no, you need to follow instructions. You need to follow procedures. You need to follow paths to be a decoupled architecture in order to be independent, that your products can be independent of your systems. And also you can have the flexibility to change your product in any time and in any way, okay? So I want to give you one advice, because as you know, I am part of Open Group. Please, if you are talking about decoupling or composable architectures, don't try to do by yourself. Try to use the procedures, the frameworks that also are supported by Open Group and by BIAN. Because if you don't, again, you are decoupling based on your own rules. So nobody will understand you, okay? Next. So in order to be more technical, what it means to be in digital banking, to be in open banking, to be in open finance, to be in neobanking. Let's take this picture, no? Digital banking is, as explained to you, is the way that you can handle a complete product journey, financial product journey, in your digital products. So honestly, you need to handle the coupling? No. You need to handle standardization? No, because are your own products. The decoupling and standardization will make the life more easy for you? The answer is yes. Is mandatory? The answer is no. Because at the end, you can handle a proprietary architecture and you can handle your own channels, okay? So when you move up to open banking next, you can see that the things are changing. You can see here in the APIs are standard and are decoupled for your core systems, are independent from your core systems. And it's very important to be independent, because if your APIs are related to your systems and are related to your channels, you cannot export those APIs to anybody. Very important topic. The coupling is the way that you can be independent of your systems and your channels. If you have dependency of your systems or dependency of those channels, those artifacts are not decoupled. And this is what open banking does. Open banking creates, basically in the operational operational functions, creates artifacts that are independent from your systems, your core systems, and for your channels. So can be used by any channel and can be used by any core system. Okay, very important in terms of architecture. And I told you many times this fails. Okay. And also, in order to know if you are doing correctly in terms of APIs, also Open Group and BIAN have a checklist that you can see if you are really creating the coupled artifacts there in the API. Also, if you want to move to open finance, you need to decouple the rules, the flows, and the APIs. Okay, so the flows are not proprietary, are choreographies. The rules are not proprietary, can be the request response of the rule is standardized because it can be used by anybody, and also the flow must be standardized. So again, if you are trying to move to the open finance space and you are creating a proprietary onboarding, a proprietary post-sale, and you are a proprietary business rules, you are failing, because nobody will understand your onboarding and nobody can add your onboarding in third-party environments. So it's very important if you want to move in open finance ecosystems, okay, that you standardize and decouple not only the APIs, also the business rules and also the flows. The flows are mainly the onboarding and the post-sale flows. When we move to the neobanking, you can see, and also you can see that the core banking system is reducing. Okay, is fit. It's not a fat guy. It's right now is fit. So when we talk about 4th generation core banking system, the strategy is this one: try to put totally decoupled the onboarding, the post-sale, the rules, and the APIs, and maintain your core system as a smart calculator. This is one of the key topics in 4th generation core banking systems. When you see a core banking system handling the onboarding, handling the post-sale, handling the rules, honestly, you are not preparing this bank to be in the open finance space. But you can see here in this graphic, also, the product itself, it's separate from the core system. So if you take this complete product, all these artifacts, you package those artifacts, and you can give it to a third-party bank. I don't know, I am a bank in Spain, and I want to give my product to a bank in Singapore. I can package my product, and I can give this product to the third party, and it works. And this is neobanking, the way that my product can be packaged and can work in any environment created by me or environment created by third party. Okay, and the reason of that is you see here the product is not related to the core system, and it's not related to the channels. So basically the product itself is an independent architecture. Okay, so this is very important, because when you create this, you are creating real independence of your product. So when we talk about customers, okay, I am creating a neobank, but the neobank depends of my core system. This is not a neobank. This is a product that works with your core system. You are a neobank if your product can work separate from the financial institution and can work in any environment without any dependency of your bank. This is the key fact of the neobanking. And also, of course, the adaptive neobanking is where you put your data lakes on top. You see in the right downside part of the slide is where you put the data in place. After you made the decoupling, you can start working with artificial intelligence or the cognitive strategies in order to really be dynamic. Okay, so these are the 5 layers in terms of the architecture people. Before that, I show you as a business perspective. Here is as an architecture point of view. So, but the important point here is to see how, if you are evolving, you are decoupling more and more. Decoupling and standardizing, because if you see, all these artifacts are standardized by BIAN standard. And also, I have many questions from customers that are telling me, okay, Fran, my regulator is telling me that I need to use ISO 2022. Wonderful. Also, I can apply ISO 2022 with BIAN. It's not a problem at all, okay? Because as I told you, ISO 2022 is a dictionary. BIAN is the Lego itself. So I can put the Lego with the ISO dictionary without any problem, okay? Next. Important call to actions when you have this vision, this point of view. First of all, right now, and also I am facing that in many mature markets in terms of open banking, open finance, that we are losing market share. I am losing market share because the fintechs are gaining market, and also I am not flexible to penetrate those external journeys. Of course, when you apply BIAN, you can have access, you apply the coupling, and you can start moving in this space. And also, same way as innovation. As I told you, everybody's talking about the coupling, but nobody is using the manual of the coupling. So with BIAN and Open Group, you have the manual, and you don't need to invent the procedures. The procedures are done, okay? Also, security and privacy. BIAN is giving to you a framework that is secure and is very well used in UK, very well used in America, very well used in many places. So honestly, it's stupid. Try to create your own standard. Same as regulatory, as I told you, I am talking with many regulators right now in different countries that are starting the open finance and neo banking regulation, and all of them are okay. I need to put ISO 2022, yes, but you need to explain the banks the way to make the coupling. So if you see open banking UK, that is basically one of the most mature worldwide. Also, the coupling concept is very well received. Okay. Also, the modernization, as I told you, I am facing customers that believe that in order to move to this new environment of open banking, they need to change the core banking, or they need to modernize the channels, or they need to appify, make application. No, it's a combination of those topics that give to you the way to move to open finance. If you buy a core banking system, but you are doing it in a coupled way, honestly, you are doing nothing. Next. Again, lack of agility in fintech integration. As I told you, when you apply standards as BIAN, it's very easy to replicate any journey with fintechs or with third parties. Okay. Of course, the maintenance of legacy systems, as you know, BIAN is a good resource, and also the composable architecture is a good resource to modernize your current monolithic architectures, and it's also very useful for you. And of course, when you are able to have a route to move on from digital bank to open banking to open finance to neo banking without risk, you are adapting your strategy to a full digitalization. You are not risking, you're not putting in risk your future or the banking future, because you are facing the steps in the right way. So these are different challenges that are right now that the coupling and the standardization are facing in many institutions worldwide. And also the last thing, next, is that in order to finalize, I think that two slides are, well, this is the slides right now for Hans. But also it's very important that if in your agenda, you don't have the coupling and standardization as a key pillars, please review it. I am an architect, okay? So I am not a sales guy. I don't care. I don't want to sell this. I am right now working with many banks. I also are moving back many projects with a lot of money invested that are lost money. So please check it out, the coupling, check it out, standardization, and I will tell you that you will see the value in that. Thank you very much.
Okay. Well, thank you, Francisco. I think that is it comes from the heart. So it has been something that you lived through, that you experienced many, many times, and you can hear it in the passion. And of course, you're Spanish, and you're often in Latin America, so there is more passion at your side than in Northern Europe, where I am. But I appreciate the passion. So just going one step back to BIAN. So as you know, we are a member organization. So I just show here on this slide what is in the membership. What also is in the membership, you can meet Francesco. You can meet Francesco in working groups. You can meet Francesco online. He is part of the ecosystem that you have access to. And of course, you can participate in our working groups, create the models, and so on and so forth. So this is just a list of things that we do. We train our members 5 times a month. We have a certification in place. We have books in place, all available for our members. So on the next slide, then we see, of course, there is always a membership fee. And the membership fee is an annual fee. It's a flat fee, so there is no distinction if you have 100 people or who wants to get access, or 5. These are the only out-of-pocket costs, and it's also good to know that we set these fees in 2008. So you're looking in essence at the 2008 price list. So where can you buy things today from the price out of 2008? So I think this is should not be a too great hurdle, and it's also that it's a pro rata fee, so you only pay for the remainder of the year. The next slide. So we also have our summit. It will be for the second time this year in London. You see November 19 and 20. We're still working on the program, but we have already a good lineup for the speakers. And we can offer the participants on this webinar a 10% discount for accessing the summit. So if you are planning it, you can also, I must say, save your boss some money, but usually it's paid by the organization, but they will always appreciate it. And then we go to I think the last slide. So we have a Q&A box. There are already some in. We probably cannot answer them all, so leave this slide on, please. And the questions we cannot answer, we will answer by mail, and we will send you the deck, the link to the recording, and the Q&A question. So I will read out the questions and ask Francesco to answer them. So the first question is, could you take some examples from the real world showing the progress from digital to neobanking?
Yeah, I have many scenarios. For example, I cannot tell you the bank because, of course, the NDA is complicated, but I will tell you right now a bank that is also creating a neobank where the consumer loan is integrated with with three marketplaces, with Amazon, with eBay, and with Costco. Okay, and also the customer is handled by the marketplaces itself. The product itself is managed by the bank, and the payments and everything is managed by both. And this product that have been launched last year generated incomes of, as far as I know, $500 million. Okay. I will tell you another example that is, again, it's in the buy now, pay later, where they integrate the buy now, pay later into American Airlines. Well, I think 10 airlines. And also the customer is handled by the airlines itself. And also the product is handled by the bank. The channels is handled by both. The risk rules generated together with each airline, okay? Because of course, American, Iberia, and all the airlines knows their customer also. It's something that you need to be, the banking sector must not be arrogant. Because several times, I know the customer. Yeah, you know the customer from the financial side. But American Airlines knows the customer from the airline side. So both scenarios are good. So also you have Spin in Mexico. You have also PayPal and Stripe are scenarios that are standardized and create decoupling, and also are in embed banking space. So you have many ones. And also let me tell you one thing. You were in the Money 2020 in Amsterdam. Two banks presented their strategy, okay? And one of them that is, I cannot tell you the name, again, NDA, is the biggest retailer bank in the world. And they told everybody, my future is embedded banking. Because the customer is not with me, is where he wants. Why I need to force it to come here? So, as I told you, you have many, many examples in different kind of products, in retail, in corporate, in payments. In payments, you have a lot, and also you have substandards in US for that. So basically, I can tell you many, many samples. And right now, for example, we are working around today in 60 to 70 products right now, designing 60 to 70 products in neobanking for customers.
So another question is when we move more into open banking and open architecture, so how do we keep systems more secure as the vulnerability increases, as apps and systems become more decoupled and decentralized?
Okay. Basically, and it's something that is a combination of BIAN and open group. Okay. So you have, in my opinion, the coupling have two major challenges. First of all, security. I am okay with you. And the second one is governance, because it's not the same that you handle a monolithic architecture instead of a composable architecture. In terms of governance, as you know, BIAN have a very good governance procedures created. And also in terms of security, in order to handle the security, you have also open group created in the last version of TOGAF and also in the last version of IT for IT, the recommendations to have a secure decoupled architecture. And also, if you want to see in a practical way, you can go to the Open Banking UK website. You can download the security part of the Open Banking UK, and it's basically the copy of Open Group, basically for UK, and you can see the different security standards that they are handling for open banking and open finance space. So security, in my opinion, is not an issue, and also governance is not an issue, and also is, how can I tell you, is the ugly dog for everyone. Everybody forgets the governance, and the governance is a key factor for open banking and for the corporate architectures.
Okay, thank you. So I will answer the last question, at least the question we can answer during this webinar. So someone said, I have a large volume of legacy production API specs to rewrite. Is there something that BIAN can help with? Well, so we have two things. So as a BIAN member, you get access to a tool that is built by JP Morgan Chase for us, where you can compare APIs. You can compare the BIAN APIs, and you can compare your, let's call them your legacy APIs. And then you can decide which one you prefer. Do you want to move to the BIAN API, or do you want to keep your API, or do you want to create a mix? So you create your own API in your own secured environment. The other thing is that we are now running a proof of concept using our AI tool. And the AI tool, we have our own train tool. We trained it with all the BIAN artifacts, with everything we have. And that can tell you what the differences are between your API and the BIAN API, and what suggestions there are to move to a more BIAN compliant API. So we hope to have that available, let's say, after the summit in London. Yeah, fingers crossed. We can demonstrate something during the summit in London, but that is something that we also make available. So yes, we can help you. We have a tool for members in place, and we are working on our AI.
And also, we have experience with that, because right now we are facing legacy modernization with mainframe, with AS400 applying BIAN. Because basically, when you want to modernize a legacy, you need to apply the coupling architectures, and you need to do it in a progressive way. Yeah, you have many samples right now. I have many customers that are right now, I am modernizing their legacy systems using the coupling architectures and BIAN. And for me, is the right way to do the stuff.
Okay, great. Well, as mentioned, the other questions we will answer on paper. We'll send them to you, let's say, after when we send all the materials. So for now, thank you very, very much for attending and staying with us. Thank Francesco and Gabriel for preparing the deck and a very clear definition on what all the different terms and terminologies are, and how organizations can benefit from it. I think it was very enlightening. I enjoyed it. I hope you enjoyed it, and we would like to welcome you back at the following webinar. So thank you again. You will receive an email with all the details. Enjoy the rest of your day, and hope to meet you again soon, either in London or Money 2020 in Las Vegas, or in an upcoming webinar. Thank you. Enjoy your day. Farewell.
Thank you very much, everyone.